Welcome to Commodities and gold here. A couple of key points here is that as long as the market is above the 1250, 1248, that sort of area there on that trend line and that level, then we need to treat the market as positive. We can't short it above that level there. Secondly, if gold sometimes works with indices, it can run with indices for a couple of weeks and then can do the complete opposite as well. So that's where the sort of US dollar comes into it as well, and the fear factor and so forth as well. So we've seen from the ADP figures the other day that we're not meeting expectations. We had this sharp move down through here. So if the NFP are going to follow the ADP, then Wednesday's figures, then it's likely to spike down further. However, we don't have an impulse structure to the downside just yet. So looking, just sort of drilling in here somewhat, would be we were looking for our little 5 waves up through to here, and then now we've got an A and a B and a C here. Yes, this can turn into five waves to the downside. It would have to make new lows below the 1250 here. So you could set orders up to sell new lows to catch any spike from that direction. So just a little bit of a rock and a hard place here because of those figures coming out tonight, and this market is working sort of opposite to stock, or the indices. So bear that in mind. Bear the NFP figures coming out, and if you can set your orders up accordingly, well then fine. But there's not a sort of clear count here as such. So I mean, we can have a top in here, but it's not confirmed with price action to the downside just yet. The NFP figures, a nice sharp move down here would give us our third wave down. So that's possible to trade that. So set your orders up accordingly around that. The copper market is. I'm just going on to the 15-minute intraday here because we know that it's, if I can find my daily chart here, we've got this bounce off this trend line through here, and we're just going to see how it pans out. Now, in terms of the move up through here, from this particular low here, we've got our little 5 waves up here. So we're looking for 1, 2, 3, 4, and 5 up, but this also can be an A wave, a B wave, and a C wave to the upside. That being the case, it won't make any difference for either wave count at the moment, but we're still looking higher here. So we've got up for 1, back for 2. We're looking at the third wave moving up through here. So we've got the wave 1 and 2 in here, which is quite easy to see. Then we've got 1, 2. I thought the third and the fourth and the fifth here to the top of the third, but this is quite large here, so I should imagine that the third, fourth is in the spike here. So we'll label that the third and the fourth here, and so far it's corrective down in 3 here. So we should see a move up into 5 of 3, then 4, then 5 up through to here. So this wave 3 here can also be wave C and fail from this price point area through here. We'll get to that when we get to it. But as it stands, this is an impulse wave that's still unfolding to the upside. The oil market, it still requires support, tested support on 98, and it hasn't got it as yet, but it could do. It appears that we've got a little 5-wave structure up through to here, so we should see an A and a B and a C through here, and also to follow stock higher, which it's kind of doing. Let it mature somewhat, and then move into that. Okay, the soybeans. Now, I think this is the interesting one for trading. So you can see now that I've labeled the daily chart here. I had it labeled a long time ago, exactly the way it's labeled now, but then I took it away because it wasn't really gaining support back on the 1300 here. But as it stands at the moment, this is it's kind of confirmed because this move up through here is in 5 waves, but it took out the top here. But technically, it would need to take out the top here, because this could be down for 1, an A and a B and a C here, back for 2. So I need to take out that top there to really confirm it. But, I think that it's confirming enough here. So what we're looking at this as being up for minor wave 1, back for minor wave 2, up for minute wave 1, and A, B, C here for minute wave 2, and then we're looking up higher through here. So this is also 1300 here, so we number 3, so we can consider at the top of group 1. So support here is critical, and what it also does is it sets the target up for this number up here. Now, I know that's a long way away, but I think that's really quite exciting if we can get to that. And the other point is that we're really moving into it now, because we've got our little 5 waves up through here. And now we're looking for an ABC coming back here. Now the 50-60% retracement level comes back around the 1290 here. So we need to be prepared for that. But at the same time, we also need to be mindful too that there's something else going on here in terms of strength, that we're in minor wave 3 here, okay, of this orange one here. We're also in minor wave 2 of this degree here, this minute degree. And we're also coming into wave 3 here. And this is where we get, when we get the third of the third of the third, this is where we get gaps in the market here. Okay, and it also means that it may not pull back to the 50-60% retracement level. So we need to take that sentiment into account. So with that in mind here, this is just moving in on the 4-hour chart here. We're looking for wave 1 up into this area here, and we're counting 5 waves up through here. We'll look at that closely in a moment, but while we're on the bigger degree of structure here, this is the 50 and the 61 point retracement level through here. As I mentioned before, any buying up through here has to keep the stop under the 1272. You could probably keep it under the 1280 now. Probably the 1276 would be probably the go, and you really got to leave that there. I know it's a long way away, but this could come back, and test this 1300 here. I've got it here with this. These are the daily trend lines coming through here. These tops here. That's where that comes through here. And in some cases it sometimes finds support on them, and then moves up from there. So it may only come back to the 1320. So, one of the things here, as I mentioned, is that we've got to try and build in trades at the 1300, 10, 20, 30 and the 40, and then we'll add on the 50 as well when we get that leg on that side of it there. So we tend to overtrade, so it's difficult for us humans to put in such a small amount that it's not really going to bother us in terms of what actually happens. But you kind of got to think in that particular way in this instance. And I've mentioned this before into this track going up through here. Let's just drill in a little bit closer now and have a look at this particular structure. So what we've been looking at through here is we've been counting the waves up here, and to me they're quite clean. We've got a nice wave 1 here and ABC for 2. I don't have a problem with that. I don't have a problem with this little wave 1 and wave 2 here. I don't have a problem with 3 and 4 here, typical sideways 4th wave pattern. This is moving up for wave 5, 1, 2, 3, 4, 5, or even 5 to here as well, which wouldn't surprise me as well. So wave 5 of 3 to here. Not that it makes any difference, because wave 4 would still be in here. Going into wave 5 up here, we're looking for 5 waves. So we've got 1, 2, 3. I can move that 3 over to here. Anyway, you get the picture. The wave 4 here, and then the wave 5 up from this point coming up through here, which may not move that far. It could be the same length as wave 1 here, so not a big effort, so to speak, just above the just above there. And then we've got the A wave, the B wave, and the C wave. Now, as I've mentioned, it can pull back to the 50% retracement level at 1300 here. That was taken from the 1340 actually. So this is really, but also we've got good support here as well, and being a third of a third of a third, it just may not pull back that too far. Yeah, look, that's it. I suggest just getting, allow this to complete up through to here, and then just start buying, back through here, and also buying to the upside as well through here. But it's important to get those positions in at different prices, and at 10, 20, 30, 40, and 50 through here. Okay, that was a bit long-winded. On to wheat. So with wheat here, we've pretty much got our 5-wave structure to the upside here. This may only be the fourth, and we may get a 5th wave to here as well before we get this A, B, and C through here. But one way or another, we've had our trend up, and now we're looking either from the 600 or the 590 as mentioned. We're looking for a corrective pattern through here, and then further upside there. Because we got 5 waves here, we're going to get another 5 over here. We're still going up, so I suggest buy pullbacks, retracements on that, or use the robo method. The corn market, as I mentioned before too, is that the move up through here, the 1, 2, and 3 here, can also be the alternative A, B, C here. So it can be a corrective move up in terms of an A and a B and a C, or wave 3 here. However, that said, in wave 3 here, or wave C, from wave 2, we'll be getting 5 waves. So we can see 1 and 2, and we're kind of in the 3rd wave at the moment, probably at the top there. China have cancelled some US corn contracts, so that's put a bit of a damper on that there. But in terms of trading, what we want to do, I'll just drill in here now, in terms of trading, as mentioned before, we want to buy on support at 440 and then higher ground here. So I think we're in the top of the 3rd wave here, so we'll be looking for an A and a B and a C, and then we can buy here and move up through to here. Now, this is a classic trading levels pattern where we've got the arrival, the reaction, the first high above the level, then the 3-wave corrective pattern, and then moving up from there. Of course, you can see that in Elliott terms as well, but just understanding the classic pattern at a level, it just makes, you don't need to understand Elliott. All you need to understand is it comes up and hits it, it gets sold off to some degree, then it makes an effort up through here, which is always on lower volume, and then you get your corrective phase normally in 3. And if you can identify a 3-wave swing and then a move up and getting support, then you don't need to count the waves. You just need to sort of visually put them in place, and away you go. Seeing 3 waves here and a move up, which overlaps the bottom of this one here, this move up here, overlapping this one here, creates the 3-wave structure. Then you know that high is going to be taken out. Anyway, we've got positions in here. We want to be adding on the 440 through here, and you can add on the 445 as well if you like. But we can add on the 450, but we have to expect a larger correction here and more time consuming because it's a larger wave 4 here of the next degree higher than this one. Okay, orange juice. Once again, this move that we've got up through here is in 3 waves as well, so that's why we've got the question mark here. If we were above the 150 here, then we'll be, would be in a bullish mode, but we're under the level, we're under the closest largest number, so we need to consider the bearish bias for this market as well. This move here, if we do count it as being positive to the upside, then this is how it would sort of pan out through here. So far we've got this move here. This can be an A and a B and a C, and you could be buying on the top here. It's as simple as that. But what we've tried to do is we've tried to build in the trade through here or through here, and we want to continue to do that. Now this pattern here appears corrective, so when we look at it, no, I don't have it on a 5-minute chart, but it's a triangle pattern, so just buy new highs here on the 145. So look for some sort of 145.33 or 145.30 on top of a little group 1 there. All right, that's it for commodities. So the opportunities lie best in soybeans.